Good morning, it's Jeffrey Christian of CPM Group. It's about 8:20 in the morning on Friday, 3rd of February. I want to talk today about the complexity of the transition. Really what I want to talk about is the FOMC increase of 25 basis points on the Fed funds rate and Chairman Powell's comments and the market's reactions to Chairman Powell's comments. But, we started the year talking about how we saw 2023 going to be a year of transitions across issues, from politics to economics to financial markets to the war, the Russian invasion of Ukraine, to Chinese politics and the way China deals with itself internally and deals with the rest of the world, and then also in the commodities markets. We have outlined a view that the gold and silver prices would be a little bit strong in the first quarter, quiet down in the second and third quarters, and then possibly toward the end of the year pick up as these transitions in the economy and financial markets devolve. Specifically, we've said we didn't see a recession this year. We expected interest rates to rise in the first quarter, plateau in the second and third quarters, and possibly start declining in the fourth quarter. We didn't see inflation being a problem. We expected inflation to continue to decelerate from the rise that we saw from March of 2021 into the middle of 2022. So you got to remember, the inflationary period was 15 months. The disinflationary period is now in its 7th month. We understood what Chairman Powell was saying. And people were saying we didn't understand what was going on because he seemed to be saying that we were going to avoid a recession and that we could manage to continue to grow the economy and find jobs for people. Plenty of jobs. In fact, there are a record number of jobs available in the United States. And that inflation was now on its way down. It was under control to some extent. Supply constraints that plagued the economies of the world in 2021 and 2022 are continuing to dissipate, and that was the case. That said, he said, to paraphrase, we're going to keep raising interest rates for a while, and we're going to keep them high for a while because we do want to see inflation go from, 5 or 6% now down to 2%, around 2% on a long run basis. I understood what he was saying. He was saying there are problems in the economy, fiscal deficits and massive debt. There are problems in the political system that are impeding the government dealing with that fiscal deficits and debt. There are problems in the broader economy in terms of supply constraints and demand. But, he said, there are also a lot of strength. So there's no reason to be petrified that we're about to go into a deep recession. There's no reason to think that the stock market's going to fall 40% or 20% or 50% immediately. There's no reason to think that the dollar is going to go away as a reserve currency of choice and of record anytime soon. So he was trying to convey to markets that things are bad, but they're not critically bad. And they're better than they were in 2020, 2021, even 2022. We've said we expect to see slower economic growth in the United States and other countries in 2023 than in 2022. That may not happen now because we're seeing greater strength, and we're also seeing the Chinese government now pivot away from its zero COVID policy and possibly also make overtures. It would like to see increased international trade, China with the rest of the world, which has suffered in the last several years. It's not quite clear that the rest of the world wants to see that, unfortunately, but we'll see where we go with that. So Powell was saying to people, this is a complex economic system. And it's not, understanding it doesn't come from simplifying things to some guru on the internet waving his arm saying the dollar's about to collapse, central banks are going to recall currencies and issue digital currencies. None of that stuff helps investors really understand where they are. And that's really what he was saying. It's a complex economic system. It's a complex financial market. It's further complicated by political dysfunction in the United States and on a global basis. But that's where we are. And that the markets misunderstood it, I'm not quite sure that's true. I think the markets understood it. If you look at the stock market, the gold price, the oil price, the currency markets, since that announcement on Wednesday, they fluctuated sharply. That doesn't tell me that they misunderstood what Chairman Powell was saying. That tells me that they understood exactly what Chairman Powell is saying. This is a runner caught between second and third base, and he's trying to read complex signals. What's the third base coach telling him? Where's the ball? What are the other team's players doing? Do I go back to second or do I go on to third? That's where we are in the economy. I know I've been criticized for sports metaphors in the past, and I probably will be in the future. This is the dollar since 2019. It has come down sharply since November. It is now still higher than it was for most of the time over the last 4 years. So yes, the dollar's coming down, but it's not collapsing. And I've talked in recent videos about international currency systems and the role of the dollar, both for central banks and on a global basis. And this is a longer term dollar. And yes, it has deteriorated since it was free to float in 1971. And it has gotten much lower for extended periods of time, really in the 80s, 90s, aughties, teens. We're in a complex place halfway between heaven and hell. And we're neither heading toward heaven nor hell. We're going to stay in this economic purgatory. Well, I got sports, I've got religion. I'm not sure where I'm going with this. Here's the Dow Jones. You hear a lot of arm waving about the imminent collapse of the stock market. And you can see that it did come off sharply last year, and it's still at record levels or near record levels. I prefer to look at the S&P. The Dow Jones is really an investment vehicle. It's like a much small index of a much smaller number of very large cap companies. I prefer the S&P. And here you can see, yes, it came off sharply. Yes, it's still at near record levels. It hasn't bounced back as strongly as the Dow Jones. That's because the S&P is 500 corporations in the United States. And so it's a much more diverse population, and it's not as subject to the capital flows in and out of stock markets as is the Dow Jones. So the Dow Jones has done better in the last couple of months than the S&P, which reflects capital flows into the stock market as opposed to a broader view of where corporate America is going in terms of its earnings and its performance. So I prefer the S&P. What's it all mean for gold and silver? Gold and silver have flopped around. I think we had about a $1.25 range in silver prices on Thursday, February 2nd. And we had a very large range, $40 or $50, I believe, in gold prices. That doesn't reflect confusion over what Chairman Powell said. It reflects the complexity of where we are economically, financially, and politically. And that's going to continue. Expect it to. So our expectations are that gold and silver, maybe platinum and palladium too, will remain relatively strong in February. They may start dissipating in March and April. Our expectations is that they don't go as low as they did in 2022. but we think that we're looking at a sideways movement in gold and silver prices in the second and third quarters. And then depending on where we are economically and politically in the fourth quarter of this year, we might start seeing gold and silver prices start to rise at a faster pace, with the expectation that we've had for a decade now, that you're going to see a recession possibly sometime in 2024, 2025, and you're going to see debt crises, not with the treasuries, but with smaller debt issuers and around the world. And you could see a more significant recession and financial crisis in that period, 2024 to 2026. Not as bad as probably 2008 to 2011, 2007 to 2011, but bad. And in that environment, we expect gold and silver prices to rise and rise sharply. Gold prices, of course, I have to reiterate this because some people don't seem to catch on. Gold prices were $1,804 on average last year. That was a record annual average gold price. And they've gone up in the first month of this year. Gold prices are not low. Anybody who says, why are gold prices so low? Send them back to school. Silver prices also are pretty high too. They're not as high as they were in 1980 for about a week, and they're not as high as they were in 2011 for about a week. But from the perspective of where they are now, they're pretty good and they're pretty high. If you're a silver producer and you're not profitable at $25 an ounce, $24 an ounce, $23 an ounce, you better look at your cost structure. Now, on the subject of silver, I have agreed, Rick Rule's company, Rick Rule Investment Media, has invited me to speak this coming Saturday, not Saturday the 4th, but Saturday the 11th. He is having an all-day virtual silver investors boot camp. He has several mining companies speaking, Wheaton Precious Metals, a couple others. He's got Bob Quatermain, who created Silver Standard and made it a great company, Randy Smallwood. He has Battle Bank. My good friend Frank Trotter has created a Battle Bank, I think in conjunction with Rick Rule. And it'll be very interesting to see what they're saying. They've asked me to give the noontime presentation, noon Pacific Standard Time, an hour-long talk on an overview of the silver industry. And I said, well, you know our position. And they said, yes, and we want you to talk about it. And that'll be followed by about 15 minutes of questions and answers with Rick Rule after that. So I'm going to be talking about silver fundamentals, prices, and I'm also going to spend some time talking about some of the grand myths that have hampered investors effectively capitalizing gains in silver. You know, the one set of grand myths, the dollar, the treasury, the world financial system is about to collapse. Get your money out of the bank by Friday because the world system is going to collapse, or they're going to call in your currencies. You know, if you have that money in the bank, it's gone next week. Grand myth. Another grand myth, world's running out of silver. I'll once more present a lot of data that shows there is ample silver above ground, and there's ample silver that's yet to be mined. I'll also explain once again why it is that bullion banks have perhaps 1 billion ounces of physical silver that they own. They're not short. And that leads to perhaps a third grand myth, that bullion banks are suppressing the silver price. In other words, shooting themselves in their own foot, actually more like in their chest. Doesn't make sense. So I've got an hour to talk about silver next Saturday. So, you know, turn off the sports, turn on the silver. It should be interesting. You would have to pay a little bit for it, but I'm sure it's going to be worth the price of 4 ounces of silver. Sign up, please. It should be interesting. You can pre-order our gold, silver, and platinum yearbooks. The gold report is being produced now, the research for it. And you can go to our website and read all sorts of stuff, become a client of ours, and move up the chain. I'll talk to you next week. Have a good weekend. Take care of yourself, those around you, and watch out for the whole world. It needs help.